Welcome back to Know Your Numbers. Thus far, we have covered the basics of both the profit and loss statement and the balance sheet, two very important financial documents that can help you manage your business more effectively. Now, we are going to take a deeper dive into key indicators or key financial metrics that you will find on those statements that need to be monitored constantly to achieve your goals. Hi, Carol. Now that we've explained the basics of the profit and loss and the balance sheet, is there a way for our audience to easily extract critical information frequently so that they can keep their finger on the pulse of their business?
There is a way for small business owners to extract this information. It is through reports in their accounting software system. I'm guessing that we have some business owners listening today that have run their profit and loss, but not their balance sheet statement. I encourage all small business owners to take a look at this report because it does contain critical information. And to really analyze your company's metrics, we need both financial statements. I know they can do it.
Okay, great. Well, then let's move forward. We've offered a lot of information about two major financial statements, but every business owner is pressed for time. With that in mind, that doesn't change the fact that he or she needs to work as efficiently as possible, but spend the requisite amount of time looking at the results critically and make decisions about what is seen. The solution to that problem is to develop a list of key financial indicators that are critical to the profitable operation of the business. This list is called Key Financial Metrics, Key Performance Indicators, or more simply, a dashboard. Each business can and will have different ones, but we are going to point out some basic ones for you that need to be monitored and reviewed at least on a monthly basis, some even more frequently. Carol?
Okay, total income. This is what everybody focuses on, right? If you do this well, everything else is great, right? Well, I think you'll agree at this part of the tutorial that this is only one part of the financial picture. So the question is, what's the best way to analyze it? First, obtain a profit and loss statement. Compare it to the last period, by month, by quarter, and then by year. Ask yourself, how did you do? What struggles did you face? What successes did you have? What trends do you see? And what variables impact your revenues? These variables could be competitor activities, economic issues, global issues, supplier issues, etc. Make notes. The more informed you are about how different variables impact revenues, the better you can respond. Okay, we're done looking at the past. Let's look at total income in a totally different manner. What if we took the historical information and decided to use that information to make sales goals? Crazy, right? They're also called projections, pro formas. Now, how do you do it? There are a few ways. One, which is the simplest and maybe not the most accurate, but you have to start somewhere. Print out the profit and loss for the span of the previous last year and divide it by 12 for monthly sales goals, or divide it by 52 for weekly sales goals. Or a different method would be to print the profit and loss statement and customize it so you can view it broken down by profit and loss by month. Then you can see the sales revenue per month, and you can use this information as a benchmark for monthly goals. These methods are not highly scientific, but you have to start somewhere. All right, so now that you can tackle total income, Ross, will you help us to analyze the gross profit margin?
Sure, Carol. So as we discussed in the income statement section, a very close second to sales in importance to a business is gross profit margins. Having a firm handle on this metric, broken down by profit center, can be the difference between success and failure. If profits are starting to creep down and sales are not down significantly, gross margins are the place to look. Are your cost of goods sold starting to creep up? If so, it may be time to respond by increasing prices. Are you focusing on selling your highest margin items and/or generating high margin add-on sales? These are just two examples, but the point is that attention needs to be closely paid to this critical metric. If gross margins are dwindling, there's a reason why, and it needs to be investigated and addressed. What's next, Carol?
Okay, let's look at fixed operating costs. Welcome to the fixed operating cost slide. Woohoo! In a previous section, I suggested running a profit and loss report as a percentage of revenue. The goal is to identify the top expenses within your company. This helps you to analyze and identify your largest expenses. So please know what they are. Sometimes the best way to overcome issues is by developing awareness of your largest cost drivers. Awareness is just one key to success. Also, you only have so much time. So choosing the 3 largest costs will give you the biggest return on your time investment. On another point, if I choose one item to drill into, it would be payroll. Quite often, this is the largest cost driver. You may have wondered, how much does an employee cost when I add in taxes, insurance, sick time, vacation time, and other benefits? Technically, the question is, what is my fully loaded cost or labor burden for an employee? Payroll reports are so difficult to read and they don't give you this information. So how do you figure this out? Let's look on the next slide at our labor burden. So to answer my question, how do you figure this out? Well, you can use a labor burden worksheet. By definition, the labor burden is the fully loaded cost of a full-time employee. It's commonly used in the construction industry. This group really has it going on. So I kind of borrowed it from them so we can take a look at it and so you can understand it. As you will see, I took items from the balance sheet and some items from the profit and loss and some items from payroll reports. Just as a note, this worksheet is outside of the 3 financial statements and it is not in every accounting software program. So we're going to give it to you as a resource later on as in our deck at the end of our webinar. So let's look at this example. The base hourly rate is $30. Vacation pay per hour is 58 cents. Sick pay per hour, 69 cents. And this gives you your total base hourly rate. Wow, right? We started off as telling an employee they only cost $30 an hour. But wait, there's more. You have to apply the labor burden, the other cost of having an employee. Again, let's refer to the example. You have the employer paid part of Social Security tax, the employer paid part of the Medicare tax. The federal unemployment tax is only paid by the employer. Also, the state unemployment tax is only paid by the employer. And there might be other state taxes. We also have workers' compensation insurance included in here per hour. We have general liability insurance per hour, medical insurance, perhaps you offer that per hour, and possibly union or other benefits paid. So this total labor burden adds up to $8.14. So as you see, what appears to be an employee that you think costs you $30 per hour, the cost really is $39.41. Interesting, huh? So as part of this program, we will have like I said, a labor burden worksheet down at the end of it, so you can refer to it. So it just gives you a lot of insight, and I suggest here to manage this cost because it really is a lot larger than you think it is. But let's look at another metric called net profits. All right, net profits, otherwise known as the bottom line. It's the last item on the profit and loss, and surprisingly, not looked at as often as total income. As I've mentioned in the past, the net profit is not the same as money in the bank, but a high number here is your goal, okay? Now, how do you analyze it? Again, I use the same method that I did for revenues or for any other measurement that I'm looking at. I do it by month, I do it by quarter, and I do it by year by comparing it to those previous periods. I ask myself again, what trends are there? What do I see? What variables affected the net profit? And I always ask the small business owners, what variables can you change to maybe increase the net profit? And then I was thinking to myself, here's another way to look at net profit. Perhaps think of how the net profit is influenced by the profit and loss 3 sections, which is the revenue, cost of goods sold, and fixed expenses. What would help you to maximize your profit? Realistically, you can't change everything at once, but small changes always grow to big changes. So pick a section to work on, run the reports, and see how your decisions impacted the net profit. Here's a few ideas. Revenue ideas. Ross and I have mentioned this previously. increase prices? Look at what your competitors are doing and match what their prices are. Cost of goods sold. Could you get your raw materials faster, cheaper, and easier from other suppliers? For your expenses, have you shopped around for insurance? Are you managing employee hours well? As mentioned, when reviewing your profit and loss by month, look at the net profits. Look at its ebbs and flows. Is your net profit seasonal? Meaning, are you highly profitable in some months and not in others? If so, I always ask my clients, what can you do to smooth that out? Well, for example, one of my clients has a golf course. You can't get much more seasonal than that. When I showed them the seasonality of their income, which was very obvious, we brainstormed and came up with an idea of opening trails during the off season and sold memberships for trail access. They also decided to offer events that were out of the season. So this was a great way of bringing in income when previously there was none. So I encourage you to just, look at it, look at your trends, see what's going on, and see how you can, possibly get other sorts of income. These are only just a couple of ideas, but I've seen clients develop all sorts of creative ways. I know you can do it. All right, so Ross is going to lead us into some other balance sheet metrics.
The primary day-to-day balance sheet metrics that a business owner should monitor closely concern liquidity or cash flow. The three primary metrics that should be monitored are cash, accounts receivable, and accounts payable. As we said earlier, accounts receivable are funds owed to your business by others, and managing this is important. Critical to know is not only how much you are owed, but who owes and for how long. This will be discussed in a bit more detail in the next session. Accounts payable are essentially money that your business owes to others. Again, monitoring this carefully is important, as not doing so means you can fall behind with suppliers, utility companies, and lenders, which can be extremely damaging to your business. More to come on that. Carol will now take you through some reporting that provides key information on accounts receivable and accounts payable.
Thanks, Ross. Okay, the accounts receivable. Let's look at accounts receivable aging report, aka AR report. This is represented as one number on the balance sheet under current assets. This report tells you who owes you money and how old the invoice is for each client. It has columns, current, 1 to 30, 31 to 60, 61 to 90, 91 and over. And then the last column is total. On the left-hand side, it lists the name of who owes you money, which is your customers. And finally, there's a total of the columns at the bottom. So how is this report created? First, you have to create invoices. As soon as an invoice is made, the customer name will show up on this report on the left-hand side, and the amount of the invoice will show up under the current column, meaning that you just created an invoice. If the customer hasn't paid within the terms of the invoice, which is typically 1 to 30 days, then the invoice amount will move to the 1 to 30 column. Hopefully they will pay. You don't see anything over there. But if not, the invoice amount will continue to move to the right as it ages. Now you can see why they call it the aging summary. Okay, quick items to think about. Monitor this report weekly. As soon as a client enters the 1 to 30 column, call them. Have them pay you immediately. Do not make allowances if possible. The further a customer moves to the right of this report, the less likely they are to pay you. If you have a lot of outstanding invoices, what can you do to change to make this better? I don't want you to be a bank for your customers, because if this report is filled up, you really have just made them a loan. And also, you're going to be out of money. So here are a few strategies. Change your terms. Make payment due upon receipt. Don't allow customers to order more items unless they are paid to date. Have them pay by credit card, even if there is a fee and may be worth the extra expense. Improving here will improve your cash flow, meaning reducing the amount of your receivables and putting more cash in your bank account. All right, and Ross is going to talk about that a little bit more later, but let's look at another report for balance sheet metrics called the accounts payable. This report tells you who you owe money to and how old each vendor bill is. You will notice on an accounts payable report that each bill is listed separately. It gives you a lot of detail. And then finally, down at the bottom, gives you the total of what you owe. First, it is created by inputting bills. take the time to do this. It provides excellent information. And as soon as a bill is inputted, the vendor name will show up on the left-hand side and each bill will be displayed. All right, again, quick items to think about. I can't tell you enough. Take the time to input bills, please. Monitor this report weekly. Pay within the due date, but not any earlier. That's my one strategy for this report. Improvements here will also improve your cash flow, meaning it will help to retain cash within the company. So next, Ross is going to go way more in depth about cash than I have right here. But this is just to look at what is going in for AR and what is going out for accounts payable. And now Ross is going to talk about cash.
Thanks, Carol. Yes, cash. We are having a discussion entirely about cash flow in the next section, so I won't spend a lot of time on it now. But again, cash is the lifeblood of any business, and if you want to be successful, you need to monitor cash frequently, even daily if cash flow is tight. That's right. You should know how much cash you have today, how much you should have at the end of the week, and how much you should have at the end of the month. Rolling 13-week cash flow projections should be a part of every owner or manager's toolbox, and we can help you set one up. Now, industry-specific metrics. Every industry has specific metrics that they can use in addition to basic ones that we've just described. They can tell a business owner not only how efficiently they are operating, but where the problems may lie so that they can be addressed. For example, profitable restaurants monitor what are called prime costs. Their combined food and labor costs each and every week. Productive retail stores monitor inventory turns and average sales per customer to tell if they're stocking the store properly and maximizing sales opportunities. Each industry has a list, so we suggest learning which ones matter most to your business and implement it into your dashboard. So Carol, this was a critical session as it ties together the two most important financial statements and what they should be looking for on them as they begin to become more financially savvy. Are there any key takeaways here?
Well, I agree with you. We have covered a lot in this section and we've meshed them all together. I guess I would say when you use these metrics for your own company, the insight you gain will be invaluable. You know, small business owners know intuitively that they are or are not making money. You may have wondered how would you be able to identify what areas to focus on, and the metrics that we presented here answer those questions and lead you to success.
And I'm one thing I keep harping on and like to talk about here, in addition to the key industry metric, comes it all back down to gross margins. Making sure that your gross margins are where they belong is critical to the success of your business. So next time we will take a look at the all-important cash flow management topic and provide some pointers on how to improve it and manage it on an ongoing basis. We hope you'll join us.